Good morning, everyone. We shall start the session in a minute. We are expecting more participants to join. Good morning, everyone. Welcome to Prebail with William in India. This is Rajasekhar Kongari, equity research analyst. A disclaimer for this presentation is that stocks or sectors which we are discussing are not for any investment advice. They should be taken for educational purposes only. Let's start by discussing how the Nifty is placed at the current moment. I'll try to annotate a few lines here. This red line is a 50 DMA. You can see here Nifty has been trading near its 50 DMA for the last 5 to 6 trading sessions. It has been reclaiming and breaching that level. There is no proper momentum in the Nifty. It's very crucial for the Nifty to find support at this 50 DMA. 50 DMA is very good support for the Nifty. And this green line is at 21 DMA. Nifty is trading above that level. Currently, Nifty is at 16,050 level, 200 points above the 21 DMA, slightly above its 50 DMA. And if you see for the last couple of months, Nifty has been in the downward trend. You can see here clearly downward channel. We want the Nifty to reclaim its 200 DMA and exhibit a follow through day. Follow through day is Nifty advancing 1.5% or more on volume higher than the previous session. That indicates fresh buying is happening in the index. By index, I mean fresh buying happening in the major stocks, leading stocks in the index. That gives a fresh momentum for the investors, and the new rally is about to happen. So that is a sign of new rally is about to happen. So we would like to see those signs in the Nifty before adding stocks to a model portfolio. We have been staying silent for the last couple of months, but it is okay. It's it's okay to stay sidelines rather than losing money in this turbulent market. Some of the key stocks which have reported earnings during the weekend are HDFC Bank, which is a index heavyweight stock, has reported good numbers. You can see here net interest income. That is difference between interest earned on its loans and interest it has given to its deposits. That is a net interest income has grown 14.5% year-on-year basis to nearly 20,000 crores. This is mostly driven because of advances and deposits. By advances we mean loans. Loans have grown 22%. Deposits have grown 19.2% year-on-year basis. Growing deposits, very good sign for the bank, for any bank, because the deposits are low cost funds. Currently, deposit rates around 3 to 4%. So they can generate if they give those deposits to the as loans, they can generate anything around 8 to 10% interest rate. So that is how the banks make money. So growing deposits is a good sign for the bank. PAT has grown 21% year-on-year basis to 9,500 crores. One thing that is deteriorated is the asset quality, both on gross or net basis. It has increased, which is not a good sign. This is quarter-on-quarter basis. GNPA, that is gross net non-performing profits assets, is at 1.3%, whereas net NPS is at 0.35. ICICI Prudential Life Insurance Company has also reported numbers. Its PAT has came in at 156 crores compared to a loss of 186 crores year-on-year basis. However, PAT has missed street estimates. We might see some selling happening in the stock. Majorly, the PAT has increased manifold because of lower claims, and provisions have come down because of declining COVID in the country. Value of new business has grown 32%, which is a good sign for the company. Value of new business is a key indicator of insurance companies, key metric which is to be tracked across the insurance companies. Bharat Electronics has also reported its revenue has grown nearly 100%, 90% to 3100 crores. PAT has surged 1400% to 366%. This is again because of a lower base due to the COVID in the last year, same quarter. Key companies which are reporting results today are Alok Industries, Nelco, Bank of Maharashtra, Heidelberg Cement. So these stocks will be under the radar today. If you have any of these stocks in your portfolio, please be watchful. You might see some huge volatility in these stocks in the today's session. FIs have been again turned net sellers. For the Thursday session, they have bought nearly 300 crores. However, on Friday, they have sold again 600 crores of equities. This is a sign of concern for the Indian market. We want the support of foreign institutional investors into the Indian market. Domestic investors have been taking major chunk of Indian equities. Crores of equities in the Indian markets. This is on Friday session. The global markets, I can see here on Friday, each market closed pretty strong, near 2%. All the major indices, Nasdaq, Dow, and S&P. Asian markets are also following the similar cues, trading more than 1%, which is a good for the markets. Brent crude is nearly at $100 per barrel. Zone to Brent crude, we are, according to RBI, they are expecting $150. Sorry for the disconnect, some internet issues. I think Brent crude is trading at $101 per barrel, and US 10-year bond is at 2.9%. Rupee has been depreciating. It has touched $30, 30 per dollar, 80 per dollar as well. It is currently trading at 79.8. So our imports will get costlier because of this. However, our exports like IT services will get more value for their exports. Nifty is also getting a positive opening for the Nifty as well, around 150 points higher opening. Most of the Asian markets are also trading more than 1%. So similar action can be seen in Indian market as well after opening. This is the sectoral placement as of Friday's closing. Most of the sectoral indices have been changed to rally. That is Nifty IT and Nifty Energy are in under pressure. Pharma is in rally attempt, so it is attempting a rally. Likewise to Nifty. Only concern is that most of these indices are still trading below their 200 DMAs. We would want the sectoral indices as well as Nifty index to trade above 200 DMA. Until then, there will be turbulent times. There will be volatility intraday and positionally as well. We have chosen Mangalore Chemicals as a chart of the day today. You can see here it is currently breaking out of its stage 2 complete handle base. Ratings wise, it is very well placed. EPS of 81, price strength of 83, A by D of A minus is all top notch ratings. Uh, Again, disclaimer is that we are not advising the stock to buy, but we are trying to educate our participants here to how do we look at charts. During the handle portion, you can see here, let me annotate this one I'm talking about, handle portion. If you couple price action with the volume action, volume has been stayed below this average volume line, which is a good sign. And during handle portion, we want weak investors to exit from the stock. And at the right side of the handle portion, we can see that is on the upward trend. The volume has also is at above average volume. That indicates a good amount of buying happening compared to selling it happening on the lower volume. The stock is placed well on both on technical and fundamental characteristics. Just because of the overall market structure, we are not adding stocks to a model portfolio. And one more is that a blue dot stock is continuously forming a blue dot, which is also a good sign of strong technical character. Thanks for joining, people. Have a good trading week, and we hope to see you again at